Good morning. Welcome to Almus Market Morning on this important day for the Indian market when the Union budget is to be presented. We start with the global markets where we have seen a good recovery in stocks once again, where investors have actually been latching on to beaten down stocks as well as those stocks where the impact of tighter monetary policy will be better managed by the companies. So we are still on a recovery path from the stocks. Besides that, some Fed members have been giving subtle hints that the market might have read too much hawkishness into the recent Fed statements. On the other side, German inflation came higher, and along with that of Spain, all this giving a sense that ECB might be on the path to normalizing slowly. In fact, that was reflected in German 10-year yields, which moved decisively into positive territory. So the Eurozone GDP, it came lower than expected, but that should be pinned down to impact of the virus spread, which is likely to fade in the coming months. So this slight toning down of Fed hawkish message plus the inflation higher in the Eurozone, along with German yields moving higher, helped the dollar index to go down with the euro rallying nearly 1%. On the domestic front, we had the economic survey, which painted quite a positive assessment of the economy. Growth projected at 9.2% for the next fiscal, and for this fiscal at 8 to 8.5%. Also, the government states that they are in a position to spend more with a larger fiscal space. In fact, the GST number that came yesterday, above 1.3 lakh crores for the fourth time, also must be encouraging to the bond market. Data release also showed infrastructure output rising by 3.8% compared to a contraction of 0.4% last month. We also had the picture on tax collection, which is better, and the economic survey, which has been upbeat. All these things together helped the rupee to recover and hit a low of 74.60 from a high of 75.05. Helped also by the flows from corporate once again. Stock markets also had a strong recovery. We are heading into the budget with a very strong overall macroeconomic indicators, at least domestically, while the external factors are not so conducive for India in view of tightening financial conditions and also oil prices, which are still at 7-year high. Overall, the rupee should be with a positive bias, possible to test 74.30 today into the budget, and from there we should see how RBI approaches, particularly if the flows continue, whether they absorb or let the rupee appreciate, particularly if the dollar index is going down. Thank you. Have a nice day.
Thanks, JK. Directly jumping to the US yields, US 2-year yield is dealing at 1.17% after a very good jump of 45 basis during the month, and that's very critical. Now it would be dealing in the range of 1.10 to 1.25% till the real rate cycle starts, and which is likely to start in month of March. Month-end adjustments, which we have seen many times in euro, has really moved euro yesterday evening, and it has given a jump of around 0.75%. Euro is dealing at 1.1230. Critical to watch is basically whether it dips below again 1.180 or it takes path towards 1.14. Now, if it clears 1.1350, 1.14, it can make a big move. We saw some good buying in gold near 1780 levels again, and it's closed at 1797. The primary region can be quoted, that is USD index was weak yesterday. After a very decent move in oil, still oil is consolidating at higher range. Brent crude oil at 89.50 and WTI at 88.30. Now market would be looking at that these prices, whether OPEC is able to produce what they promise, and that would be a critical factor for prices going forward. Now coming back to Indian market, there was a decent rally in 10-year G-Sec yield yesterday, and there were two primary reasons for that. One is the expectations of clearing the hurdle by exempting capital gains tax on a foreign investors in G-Sec would be likely to announce today in budget, and RBI's switch of assets of a short term to long term of rupees 1.2 lakh crores. Which basically, by doing this, RBI gross borrowing requirements goes down because the near term liabilities which were to be paid by government hedge reduce. 10-year GSEC is closed at 6.6850. Budget would now the bond market would be looking at bond and currency, both market participants would be looking for a fiscal deficit which is likely to be in the range of 6 to 6.4, and net market borrowing which is estimated at 9.5 lakh to 10 lakh crores. These numbers are very tall even after so much of adjustment. And other thing, what market would be looking at the status of capital gains tax for inclusion in global bond indices. That's all from me. Thank you. Have a nice day.